So welcome to Real Estate Views with Karen Lynch. Today's topic for discussion is optimizing home financing in today's market. Do you have a handle on the lending industry? What are the down payments required to obtain a loan today? What are some of the loan programs? Does your credit score affect the financing rate that you receive? These may be some of the questions that you have. This industry is very dynamic and changing rapidly. So I have with me here today Neidetcher from Guaranteed Rate Affinity. And he's going to help us straighten ourselves out a little bit on the programs that are available. And hopefully that will help you decide what program is best for you. But so thank you, Leo, for being here with me today.
My pleasure.
Before we go into the discussion, I do want to share a little bit about your background with folks that are listening or watching. You have been in the lending institution or the lending industry for 18 years?
18, yeah.
Okay.
Yeah, just after 2000, yep.
Okay, with several different lending institutions.
Yeah, it seems to be the norm in the industry.
Right.
You got to go where the best products are, best rates are, and sounds like I have a pretty nice home right now.
That's awesome. Yeah. Very good. And I know that in 2010, you were voted on by your peers and co-workers to be the most outstanding loan officer of the year.
Yeah, very proud moment. PNC Loan Officer of the Year, voted by my peers, co-workers at PNC Mortgage. And that was nationwide. It was very nice. Yeah.
Awesome. That is really a great accomplishment. Yeah. Congratulations on that.
Thank you.
And President's Circle for 16 years now.
Yeah, and we got to keep that going. Yeah. Take my wife on vacation once a year.
Exactly. Yep. Well, so with all of your vast experience and knowledge, I'm hoping today that we can clear up some questions that people may have. I know my buyer clients have same kind of questions over and over again. So we're going to talk about the most common. So let's start with the proverbial question. Okay. Do I need 20% down to be qualified for a loan? Absolutely
not. Not anymore. And, sometimes my advice is with rates still being relatively low, you really don't, maybe not even need the 20%, maybe finance as much as possible as you can, but it's all up to the client. We'll go over all these numbers. They also want to feel comfortable in a monthly payment. And the more you put down can sometimes get that payment down for them. They're going to make the ultimate decision. Not at all. Definitely when you're in the conforming conventional loan limits, that's as little as 3% down. Jumbo lending, that $453,100 in the Chicagoland area or higher. Jumbo lending, typically 10% down is the little the amount.
Okay. So it's not a special program. It's just, I don't know where that misconception came into play, but...
Well, I think a lot of it was in 2008, 2009, in the financial collapse. Yes, most banks tightened up, and 20% was the norm there for a little bit, but it just hasn't lost that stigma a little bit.
Right.
Yep.
Okay.
But it's a good point.
Okay, great. So what are, the best practices for, any home buyer is to get pre-qualified?
100%. Yeah.
So what are some of the things that you look at when pre-qualifying someone to obtain a home loan?
Sure. The first thing, and I can never say, I tell people all the time, it's never too soon to be pre-approved. I have people every year, they might, even just the other day, I had someone say, well, I'm not going to look until the spring. So you know what, I'll call you back in a few months. I'm just looking online right now. And I talk them into, let's run your credit now. Let me see your financials now, because sometimes there may be some credit challenges that I could fix before the spring comes. It might take me 30, 60, 90 days to do it. And then you're maximizing the rate, the program you can do, because we've already done that due diligence on your credit score. There's oftentimes people run their credit and they go, I didn't know that was on there.
Right.
Well, now that you do, we can, of course, address it and maybe take 30, 60 days to have it removed.
Okay.
Yeah. So it's never too soon to get pre-approved. A pre-approval is good, and credit reports are good for 120 days. And people are sometimes, you'll run my credit again if I don't use that credit report in 120 days. It's just a softball. It's nothing huge. It's not going to affect your credit scores.
Okay.
Yeah, cool.
So what is the process? Is it as simple as giving you a few pieces of
It is.
information?
It is. A lot of times we have a nice digital mortgage. People say, I'm so busy, I can't really talk right now. I send them a link. They'll do the online app at their leisure, on their couch, at night. Kids are in bed. They'll fill everything out for me, and then I will get a email notification. They've done everything right then.
Right.
Not to mention, on there, when they do the online digital mortgage that we have set up, they actually run their own credit scores. So they know what they are right then, and they see them.
Okay.
But then usually I'm going to follow up with a call and go over everything with them, of course.
Okay.
Now, there's some people that are old school. I understand that, and I'll take the loan application, get their information down, and do everything on the phone right then, too. Or meet face-to-face.
Okay.
First-time home buyers, I do try to push the face-to-face. I get it. Sometimes their schedules don't permit. But I do push for the first-time home buyer to come and meet with me, because we can go over every scenario. It's a little bit easier to understand.
Okay.
The seasoned veteran, they might say, no, I'm fine. I'll do it over the app or over the phone or online app.
Yeah, it's nice to have those different options today, for sure.
And then when we do that, we take all the information, we run credit, that's first. Then usually I'm going to ask them the questions on their income, self-employed, W-2'd, hourly, whatever it may be. And yes, I will get that information from them verbally, but a true pre-approval is backing that up and sending me those financials so I can actually verify it.
Okay.
Yep.
That makes sense.
Yeah.
Definitely.
Right.
You're not going to just hand out the letters.
No, exactly.
Proof.
I have a name too, so I can't be just throwing out pre-approval letters without seeing it.
Right.
Yeah.
Exactly. So how, once someone is pre-approved, or once they do start the actual process of the loan, how long does that take typically? And, what are some of the advice that you give to your clients along the way?
The pre-approval itself could take 10 minutes. I mean, if they have everything and they say, I can email you everything right now, tax returns, W-2s, pay stubs, and maybe verify some of their assets down payment, I can pre-approve someone in 15, 20 minutes, no doubt. So that's the pre-approval. Now, the approval process, when they come to contract, of course, typically we say try to block out 30 days on the contract as you agents fill that out. Can we do it quicker? Yeah, we can. But, 30 days I feel comfortable with, because then I'm not painting myself into a corner. There's a lot of third-party items that we need to get in to make sure that loan is cleared to close. So, and those I don't always have control over.
Right, exactly.
I know.
So I know I've heard things, I tell my clients, don't go out and buy a new car in the process. Don't, put a whole lot of stuff on your credit card.
Great point. Me and my team right away, usually I'll send up a follow email, and I actually have a flyer, the do's and don'ts.
Right.
Do not buy a new car, a new boat,
Right.
You can wait, Now, it doesn't mean you can't buy a new car. It doesn't mean that.
Right.
Just let me know, because of course that's a hit on the credit during the process and the approval process. That the banks are they find out about it, and then it causes Mike a little bit of issues.
Okay. And given that it only takes 30 days, that's not a long time to wait. Exactly. So I know that Guaranteed Rate Affinity has some interesting programs.
Yes.
Things for, like you said, first-time home buyers. The 4 plan, which is for 2 to 4 unit
anywhere from 2 to 4 unit buildings, as little as 5% down. Primary residence, of course. But that's really interesting.
Is there any other programs that you would like
people
to know about?
A lot of the programs that I'm starting to see a lot, hopefully, and knocking on wood that this is going to continue, but I'm starting to see a lot more first-time home buyers come out of the woodwork. Millennials, maybe, hopefully.
That's good.
And we're seeing that the first-time home buyer programs are Give to You program, which is just as it says, we will give you 2% of the purchase price.
Wow.
As help to the down payment and or closing costs, to cover those. But the buyer has to put as little as 3% in. But hey, it's a $200,000 purchase at $6,000. We kick in 4.
Okay.
Nice. There's also programs out there called IDA, the state of Illinois, gives a grant money to first-time home buyers. Now, those we really have to delve into because they're very income limit driven. So I have to look at the county, the area that property is going to be bought in, and the person's income to make sure that they fit that program.
Okay. Awesome.
Really great programs.
Yeah, those are very nice. Interesting. I think that was all the questions that I had. So hopefully this helps clarify for folks out there what options are available. It's certainly not your carte blanche. If you don't have the down payment amount, forget it. There's a lot of things that Leo and his team will work with you on, and
I encourage just a phone call. Call me. I'm always available.
Okay, great. Thank you so much.
You bet. Thank you.
Thank you for tuning in today. Whether you're following my podcast on Facebook, SoundCloud, or YouTube, don't miss the next episode. Like or subscribe now to Real Estate Views with Karen Lynch. Tune in and find news and views that you can use. See you next time.